Hello, my friends. I hope you're having an outstanding, fabulous day. I woke up, and that is allowing me to make this Real Estate Tuesday video. Thank you for being my friends. Thank you for being my subscribers. And if you're not, please subscribe. Please like my video and share my video if you find it worthwhile and think others would like it too. I'm changing my approach instead of saying boom, 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 smash the likes, boom, boom, smash the subscribe. Today's video, it's about money in your home, equity in your home, and how to tap into it. And whether you should tap into it, I'm not really going to tap into, no pun intended, I'm really not going to touch on if you should tap into it, because I personally don't think you should take equity out of your home unless you really need to. Some of my friends taking equity out of home to buy vehicles because they write off the interest. In my opinion, it's not that much interest to write off to dip into the equity of your home. Because if you don't dip into the equity of your home and you have that equity continuing to build up and continue to pay off, and then once paid off, when you finally retire and sell that, that's like an investment. So whether your home's worth $100,000, $50,000, $250,000, $1 million, if you haven't tapped into that equity, boom, that's like having a Vanguard account that you've been living in. All right, so HELOC, that's the first thing, and that's really what we're going to be focused on, a HELOC. A HELOC is a home equity line of credit. What is it like? It's like a credit card. It's like a credit card. You're tapping into the equity in your home. Typically 80-90% is what banks will let you tap and take out of it. 80% of your equity, 90% of your equity, and it's a credit line. So you get a home equity loan. Say your house is worth $100,000, and you have that much equity in your house, and you get 80%. So you have an $80,000 line of credit that you can write checks on. And you can write checks up to that 80% or that $80,000. And typically, sometimes you get a home equity line of credit. It might be fixed for 1 year, fixed for 6 months, and then it varies. It's variable. It's variable based on the prime rate. What is the prime rate? The prime rate is the federal fund rate. It is a short-term lending rate that banks charge other banks to borrow money. So typically your HELOC will be prime plus 2%, whatever. That's the profit that the HELOC loaning bank is making. So the HELOC, so the bank lends you the money, they're paying prime, and then above prime is their profit typically. Typically the HELOC, it's a lien on your home, and you can pay interest-only payments, or you can pay interest and principal payments. And then an example could be the HELOC is good for 15 years. You borrow money, you borrow $50,000, and you start paying that back. That $50,000 might be interest only until year 5, then you have to pay it all back. So there's different terms that different lenders will charge and implement when they give you a HELOC, but the concept is the same. It is a credit line based on the equity in your home. The other type of way to tap into the equity in your home is a home equity loan. And whereas a HELOC is a chunk of money that you can take out a little bit here, a little bit there, you pay it back, and then you have that equity again to take out. A revolving line of credit, like a credit card, that's a HELOC. Well, a home equity loan is just one loan. It is also a lien on your home. It is also based on the equity in your home. And again, typically most banks allow you to take 80-90% of the equity, but you get one chunk of money. So a home equity loan, instead of having a credit line for $80,000, if you're taking 80% of equity out of $100,000, you just get one check. Boom, here's $80,000, and you start paying it back right away. And it could be a 15-year loan typically. And when you pay it back, so you paid $40,000 back, you don't get 40,000 credit again. It's just one chunk of money. It is not a credit line. It's typically a fixed rate versus a variable rate of the HELOC. And again, not something that I recommend is taking that equity out of your house. Now, who does these? Mortgage lenders, banks, credit unions. When it comes to a home equity line of credit, a HELOC, or a home equity loan, I think credit cards, oh my gosh, I think credit unions are the best. Now, I'm going to tell you, I did some research with one of my favorite credit unions that I have, Navy Federal. I use their credit card whenever I buy my e-bikes or e-trikes or anything expensive. I use it because I have protection, great protection. So I'm going to tell you about Navy Federal credit unions, HELOC and fixed equity loan, and I'm going to tell you what their terms are. So Navy Federal HELOC, many credit unions have very similar terms. So this is what you want to make sure of if you're going to tap into a HELOC or a home equity loan, you want to compare and get your best terms. And I typically find credit unions. So Navy Federal, no closing cost. You get checks and they give you a credit card. They give you a home equity line credit card. You can borrow up to 95% of your home's equities, whereas most of them are 80 to 90. Navy Federal is 95%. The interest rate is variable based on the prime, and there's no application fee, no origination fee, no annual inactivity fees, and you can also have payments as interest-only option, which is your payment, you'll be much less than if it was interest and principal. And today's rate, today being April 2025, the rate is 7 3/4%. So the regular mortgage rate is like 1% less. So this is 1% higher than a regular mortgage rate. And Navy Federal is giving you a 20-year term. So a lot of places will only give you a 15-year term. So that's Navy Federal's HELOC. Now, Navy Federal's home equity loan, again, shop around. No closing costs. You can borrow up to 100% of your home's equity. 100%. The interest rate is fixed for the life of the loan. No application, no origination fee. And as of April 2025, the rate is 7.34, so a little bit higher than the mortgage rate, but no closing costs, no fees, no expenses, and so you'll typically get, and you can do multiple terms, 5-year term, 10-year terms, 15-year terms, 20-year term, 30-year terms. If you're thinking about a home equity loan or a HELOC, home equity line of credit, go to your credit union. And I always tell people, if you're a veteran, work for the government, Navy Federal, that is a great credit union. All right, my friends, that's my quick synopsis of a HELOC and a home equity loan. Neither one I recommend unless you really, really need it. And the other thing is, if you really, really need it, maybe something catastrophic emergency, something like that. But the other reasons why is if it's for home stuff, bathroom remodel, you need a roof, you need HVAC. That's, in my opinion, my personal opinion, a better reason to tap into the equity in your home than it is to buy a car. All right, my friends, thank you for being my friends. Thank you for being my subscriber. And if you're not, please become my subscriber. Please smash that like. Please like my video, share my video. And until next time, Real Estate Tuesday, I love you all. See ya!